Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Welcome back, listeners, to Tax Insight here on WOMT. We have Jeff joining us once again here on the program. Jeff, good morning and happy holidays, sir.
Good morning, Terry, and same to you.
It is the holiday season. Hopefully you enjoy this time of the year. Today, inflation adjustments. It is the topic. It is a conversation that we have to have.
It is because, we all know that inflation over the past year has not been good for our pocketbooks. But, sometimes there are some hidden benefits in the form of tax savings. That's what I want to talk about today is tax rate changes and other changes that are happening for 2023 that are directly related to our higher inflation.
All right, my friend. So let's jump right into it because there's a lot here to talk about.
Yeah. So since most taxpayers take the standard deduction, let's start here. Now, I don't want to push a lot of numbers since, people can look that up pretty easily. But if you're married, the 2023 itemized deduction amount or standard deduction amount is $27,700, and that's up $1,800 from 2022. I give you that number to say that if you were in the 22% tax bracket, that's like a $400 tax savings just by that standard deduction going up alone. But because that standard deduction is going up, it's going to make it harder for more people to itemize since they really don't have enough of those big four deductions, medical, taxes, interest, and charities to qualify to do itemizing. But, the $400 savings is going to be pretty nice.
Absolutely. So let's talk about the tax rates then.
Although the marginal tax rates have stayed the same, the size of the brackets actually have gone up by 7%. So that's going to allow people to save money because they're going to be paying more of their tax in those lower brackets. Now, remember here that there's actually 5 brackets, and they range from 12% up to 35%. And we talked about this in a prior show, but just because your income may go into the next bracket because of maybe a raise or a bonus, all of your income is not taxed at that new bracket. You always get the benefit of the lower brackets, which is why they call it the marginal tax rate.
So what about gifting then?
Most of us know, you can give any person up to $16,000 a year without any questions asked. This is called the annual gift tax exclusion. This gift is not deductible by the person giving it, and it's not taxable by the person receiving it. Now, for 2023, that gift exclusion goes up by $1,000, so $17,000 you can give any person in 2023.
Sure. Now, I know that the estate tax was also in the news last year. Did the estate tax change at all?
It did. And I like talking about this just because the numbers are so high. It's kind of fun. So, if you remember, the Build Back Better Act looked to decrease the estate tax substantially. And since this bill was not passed, the estate limits are still at the higher levels and increased for inflation for 2023. Those new limits, here you go, Terry, it might affect you, $12,920,000, and that's up by $860,000 over last year. So, for the average American.
Yeah, it's the average American. Hey, Jeff, what about retirement plans? Time is running out here, so let's jump into some retirement plans.
Yeah, so here's where I'm getting a little wonky with some numbers, but there was a lot of changes here. IRAs are going up to $6,500 plus $1,000 catch-up for those over 50. Now, 401k plans, 403bs, a lot of those employer-sponsored plans, they actually went up by $2,000 to $22,500 that an employee can put away. And if you're over 50, that catch-up went up to $7,500. So if you're age 50 or older, you can actually put away $30,000 into your 401k or 403b plan each year going forward. Now, when you look at simple plans, which are basically a 401k light, that increased to $15,500 plus a $3,500 catch-up. So, we're talking, $19,000 you can put away into a simple plan. These plans are the ones we recommend for small businesses since they're really easy to administer, and it still allows the employees to put away a pretty good amount of money. And then here's for your self-employed individuals. the SEP, or the Simplified Employee Pension, that maximum for 2023 is $66,000. So that's what a small business owner can put away. And these plans we recommend for those employers that really don't have any employees or have very few employees.
Jeff, again, a lot of information here each and every week on the program. Listeners, if you missed any of this stuff, we do podcast this program every week at WMTRadio.com. But in the meantime, Jeff, if listeners want to get a hold of you guys yet here before the end of the year, what is the best way of reaching out to you?
The best way is just go right to our website, Hawkins Ash CPAs. Find a contact for your local office on our website. Follow us on Twitter, like us on Facebook, all of the social medias that we have also.
And we'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.